More green on the screen. That's what we want to see here. Another. We're going to finish up a holiday week here, hopefully on a positive note here tomorrow. The grains will close at 12:05. We'll fire this thing back up next week then. But with that being said, I think a lot of the shift on the weather concerns are maybe going from Brazil to Argentina. Yes, there has been some downgrades to the Brazilian crop. I just don't see the concern with my contacts with the producers we work with and all of our contacts in Brazil, where there's a massive problem right now should they continue to get rains here. So we did see some adjustments lower to 127 million metric tons. I think that is really low. Now, granted, that firm had already cut production another 2 million down to that figure. So that's a pretty big cut. Now, I do think there is some concerns that are lingering in Argentina that could continue to fuel this bean market. One, weather. Two, the strike, which is continuing to be ongoing here. And so let's just take a look at the bean complex here. I continue to think beans will have an underlying bid until much more is known. And you could have an underlying bid in this thing for the next 3, 4, 5 weeks here that continue to push this. Now, I want to continue to really hit on this is, okay, you see the blue line, see the yellow lines. The yellow line is the Fibonacci extension. The blue lines are the Fibonacci retracements. Now, the yellow line represents a low back on February of 2005, all the way up to the high of September in 2012, back to the low on May 19. You see above this 2017 trend line, as mentioned last week, we continue to push towards this $13 mark. There's nothing stopping it above this recent high of 1208 here. We bring it in just a little bit more here. You can see where the Fibonacci extension and the retracement level are right around this 1284 to 1290. I do think this is a level or an area where this market could easily retrace to, or go back to, I should say. So really, I think you got to target the 38% or the 50% retracement level in this chart. So you look for some consolidation areas where this thing could maybe slow down at. And right now, I think this is the level where you want to be looking. You have some consolidation back here in 2013 and 14, and you really have nothing stopping it from here. So what takes it to a higher level where we're talking maybe to this $15 or $14 area? I think you got to have known production losses in both Argentina and Brazil. And I think if you take a look at the FOB export prices here for both corn and beans, we'll focus on beans here first, beans being on this side of the chart. You see that Gulf is now the second most expensive of the majority bean exporters in the world, right behind Argentina. Obviously, the uptick in Argentina recently here in December somewhat contributed to the strike, where they're not exporting near the amount of meal, oil, or beans in general. It's not, I don't think, because they don't have it. I think Brazil is an issue where they don't have it. But right now, U.S. is starting uptick. I really think that is partly because we need to start discouraging demand here from home, because we may not actually have the beans to export. If you look at the corn side of things here, export prices for corn, we are still very competitive when it comes to the corn side of things. Brazil, obviously the most expensive. Then you have Argentina, you have Ukraine area, then you have the Gulf. We are substantially below each one of those. So again, these are positive things for the corn market, I think, going forward. And I think if you look at this rally that we have in corn here, you start wondering about, okay, what is the potential that the USDA raises that exports again? Now, we're over 2.6 billion projected right now. Is there a possibility we could be a 2.8 or a 2.9? The spreads are definitely indicating that type of move when it comes to the export potential of this crop. So I want to keep everything in kind of the broader perspective here, It is looking good on the corn, but I do think we have some levels here where we probably need to be rewarding this market. And so same way with the beans here. We probably need to continue to reward this market. This week we did take off a lot of call spreads in the beans that we had been working since 1060, 1080, $12. We're starting to pull some of this off, more or less because of the volatility in these options are getting very, very expensive here. So you want to be taking some profit, either rolling them higher still. It's not cheap, but it overall you will take some profit, continuing to stay long this market a little bit. If you look at the 10-day GFS forecast for South America here, it looks pretty wet across Brazil. I think this is Big Kahuna, Mato Grosso, and you got Mato Grosso do Sul down here. Pretty decent rainfall, not tremendous amount, but I think if any of this type of stuff verifies here, I still think that crop is on a good way here. Now, granted, if you look at as far as the southern Brazil here, Panara, you have Rio Grande do Sul. Going to need some rain here for sure to finish this crop out pretty good. And you switch over here to Argentina, where they have been dry. I'll post you some pictures up on the commentary part about what some of those crops looks like. Some of you may have already seen them on social media, but we'll go ahead. We'll post them for the ones that are not on that. You look at Cordoba and Santa Fe down here. They muchly need rain right now. They really need some good rain. Not that the crop is going backwards in a huge way. The crop is hanging on, but it will definitely need some rain to even get close to anywhere near their potential. But right now, the contacts I have in Santa Fe and in Argentina in general say the crops are relatively good. But how they'll finish is really questionable. Now, if we switch gears again and we'll take a look at the corn chart, it's a very stout market, to say the least. But let's take a look at the continuous chart. You continue to think that this has good positive vibes to it. Again, the yellow is the Fibonacci retracement level. The blue line is the Fibonacci extension level. Really, I take a look at the blue line first. You look at the larger perspective here. Now, this is continuous monthly chart, so it's being front month traded. So this is mostly the March contract. Now, once the March comes off, it'll go into the May. But this is continuous. How has corn looked? Now, I could make a very good argument if we look at the larger long-term perspective here. If you run into some weather this summer here in the United States, why we could not trade somewhere between the 50 and the 62% retracement level on the longer-term perspective of beans here. Now, if we were to do that, we got to look for some consolidations areas. Now, if you take out this 507 mark on the Fibonacci retracement, which is 507 3/4, you have an opportunity, pretty decent opportunity. If you get above the 32%, that you're going to go back and trade between the 62 and the 50. That is within these levels right here. So let's call it 572 and 636 1/4. I'm not saying you go there, but what I'm saying is there is a potential. If you have a perception where we go from a 1.5 or a 1.7 billion carryout to a 1.1, 1.2, you're definitely going to take out these highs back we've seen in 19, right around that 460 and 70 area, and you're definitely going to try to retest this higher level back in 2014. So 2014, that's when this market started just collapsing, and we haven't really, got back there since. Now, if we go off here and we take a look at the trend lines here, this market's basically been trading between 320 and 420 or 440 for a while here. Now, we're finally starting to break out of this longer-term 6-year range here. You can see it. See it on this month's breakout above 440. So, to me, this market is going to try to peg, 454, 464, somewhere in that ballpark. Because here above this yellow line, which is a Fibonacci extension level here, you can see that we're starting to get back above 446 1/4, right? 446 1/2, sorry. That is going to be the 50% retracement. So between 446 and 481, I think this is where this market's going to be pretty comfortable or pretty fairly valued. It's probably fairly valued right now with a 1.7 carryout, but I think it's the futures market is looking ahead here and looking at the exports, looking at the spread activity and saying, hey, we might have an opportunity here to see increased exports on this corn. And so, not that I don't think it can get higher here, but any type of puts that we were long here from 430 on the March, I want to be rolling those babies higher to right around 450. And I want to be offsetting those 450 calls at the 490 level. So I want to be buying March 450 calls, offsetting that cost with selling of the March 490 calls, putting that trade on for roughly around 12 cents. It's not a bad risk reward here, given the movement that we've had here in very, very short order. The last 3 weeks, 4 weeks have been very, very impressive here in corn, let alone the last 2 months. So I think if you're looking at the broader perspective of corn, it continues to be positive. I do not think there is a massive, massive sell-off. Could we definitely see some corrections if the Argentina pork strike gets resolved? Absolutely. I think there's some pressure that will come to beans, pressure that will probably follow suit in corn. But right now, good technical structure right now I would see on both the corn and the beans. I do not like the volatility in the option side on beans. I think it's very, very risky. You're going to need those 15, 25 cent moves a day to justify the volatility. But right now, technically, fundamentally, beans look solid. Same thing with corn, but I want to manage that risk. Reward those rallies on the cash side, bump those puts higher, sell some calls to capture a little bit more premium to lower that cost. All in all, that's all I have for this week. I want to wish everyone and your families a very, very Merry Christmas. We'll be in touch here this next week. Any questions, concerns, I'll be available until noon tomorrow, 402-366-0423, or you can reach me on my new Chicago number at 312-858-3668.